that. A question on now fear and overcoming emotional barriers to liquidity. So, when traders are trading, and in general, I think everybody, I speak for everyone here, including ourselves, there's always this fear index, right? Fear greed index. How can we overcome emotional barriers and make rational decisions when trading online? And this is what I think everybody, I think this can go. How do you think we can overcome our emotional fears and also try to make rational decisions when trading?
Good question. I'm probably not the best place to answer this question, but I'll give it a shot. I think it just, emotion with respect to trading is, everyone says it's the most critical part, the most important aspect. And I think it's about having a plan. It's the same with business, right? If you're not prepared and you don't do your DD, your due diligence, you're not prepared, then you will make mistakes. And I think that's where people get flustered. So there's a saying that I absolutely love, and it's reconnaissance is seldom wasted, which means that, basically if you're not prepared, then the amount of effort that you put into preparation, it's never wasted. And I think that's very true with respect to trading. Setting up your trades, making sure that you're emotionally prepared and calm is very critical.
There's also a saying that we all come up with a plan until you get punched in the face. How many of you actually make plans and then actually don't actually follow what you set out to achieve? And the question is, how can you overcome that or prevent that from happening? Maybe we'll go to Jay for this question.
So I have to admit, my role at Infinox and a lot of what I do is around, in terms of liquidity provision to downstream brokers, etc. My personal knowledge and experience of trading directly is very limited.
Got it.
So I don't want to veer into a topic I don't know. I'd rather pass to somebody else, to be honest.
No worries. Pratik, would you like to take this one?
So basically, I would want to add something that, first of all, whenever you're entering into trading, okay, do not understand this is the first day or this is the last day. Okay, the market gives you avenues every now and then. When you talk about emotional trading or sentimental trading, this can draw you down. That is something that you have to have a hold on, because market gives in opportunity avenues every now and then, as I'm saying. When it comes to liquidity, when it comes to strategic partnership, when it comes to market analysis, when it comes to sentimental or emotional trading, these things go hand in hand. It's not one aspect of your trading. If you cross one aspect of your trading, if you have mastered something, you have to move on to another one, because market moves on several aspects. It just does not stick to one of it. So keep an eye on all the indicators. Indicators, I'm not talking about technical indicators. Indicators that about your greed is one indicator, which is the biggest indicator that I see. Today, if it's not possible, it's okay. Market will give you a chance tomorrow or maybe day after. Today is not the end of the world, right?
Yes.
If you earn today, what about tomorrow? You will not earn? You'll stop it? No. So slow and gradually, let's go on. Right now we have been seeing on LinkedIn again the tortoise and rabbit story has been flaunting every now and then. Slow and steady wins the race. So let's stick to this plan. Keep learning, because eventually you'll make losses. Keep understanding the market. Where am I going wrong? And you will definitely narrow down a couple of points. Just stick to that. You will have a happy trading life.
Yes.
We'll go to Amarnath. I want to add one more ingredient to this. There's this four-letter word that I hate, FOMO. And in today's, if you don't know what that means, fear of missing out. In today's world, with everybody having smartphones and access to the internet, it's so difficult to not want to hit that trade and jump on the bandwagon and be part of something big. Amarnath, as part of this conversation, what's your take on how to, focus and stay on track to your plan?
To be honest, while you may want to focus, while you may do all the due diligence and all the discipline that you may have in trading, you will make mistakes. I mean, it's the heart versus the head, right? It's like I remember a few weeks ago where there's a football game and I wanted to watch it with my friends, but then my wife had booked me for dinner with her. And decide what you want to do. At the end of the day, I go, obviously, when it comes to home, you need to give priority there. So I went for the dinner for my wife and I realized that Manchester United had won that game. I missed out having fun there, right? So
Right.
You'll always make mistakes. You'll do that. But it's all about learning from those mistakes. It's all about you'll have a trade going wrong, going against you. But at the same time, as Pratik mentioned, you'll have days which are good days for you. It's all about balancing it out. There's no way anyone can say that you can leave emotions completely out. We are all human beings. At the end of the day, there will be some amount of it that way. It's all about how you rationalize it.
Fantastic. I think that's a well-balanced response. Thank you for that. I think we'll move on now to, I want to speak a little bit about purchasing challenges and the access to liquidity. Since this topic is about liquidity, one of the trends that we're seeing, many introducing brokers I've spoken to, social media influencers, to access and unlock more capital up to 200K or plus, depending on the broker. You can purchase a challenge, and if you win, you get to keep 90% of the profits. While we're on the topic of liquidity, I wonder, do you think, any of you, we'll start with Lachlan maybe. Do you think this product is sustainable long term? Wouldn't it be nice to just withdraw that liquidity if you could? But unfortunately you can't, and you can only trade with it. What's your take on this?
Yeah, very interesting question. I assume we're referring to prop firms?
That's right.
Yeah, very interesting. It's not something that my firm currently is actively pursuing in terms of a business line, possibly in the future. For me personally, I've overseen a lot of these firms grow rapidly over the last couple of years. It's been quite remarkable. I'm curious to know what Jay thinks about prop trading. No, I think from my perspective, I'm no expert in that space, but I would say that I think for it to continue to grow, of course, people would love to withdraw the money. I think that's very obvious. But in terms of the success of these firms going forward as a strategy, I think there does need to be regulation, and I think it's almost inevitable. That's pretty much all I have to say on that topic.
Jay, he selected you next, so I wonder what your take is on this one. We'll go to you next.
Well, I think the prop trading product, it isn't new. It is resurfaced and it's at an early stage. A lot of work has to be done between, as Dr. said, regulators, technology, proposition of the product, etc. It is an early point, and I think there's scope or room for it. But at the moment, I think the product's fundamentally flawed. I'm just not comfortable with someone believing they've got $1 million in a trading account when they don't. They can't withdraw the money. They're restricted what they do with it. So for now, I'm just not comfortable with the product in its initial proposition, but I hope that it gets better and we can all engage with it in the years to come.
Could I just add to that? Yeah, I agree with Jay. I agree. I think the marketing around quite a few of these firms is disingenuous. They're intentionally made. There is an element of leaving things out or making it ambiguous, let's say, with respect to whether it's real or not real, with the different levels and the stages of the challenges. But I think what is important is the new entrants that this has brought to our industry as a whole. There's a lot more new entrants. It can be a lower barrier to entry, which has its own complications. But overall, what we want to see is this industry continue to grow off the back of COVID, which was enormous for everyone. I think the prop trading it has a lot of potential. It just needs a little bit more regulatory supervision.
We'll go to Pratik next, but I do want to add as well. Again, the FOMO element of being able to access this capital that's not yours. You can't really withdraw it. But the FOMO around, you can access it. You can take 90% of profits for yourself. The way they market it as well. There should be an element around it. But I think it seems like it's gotten a pass from the regulators. So I wonder, Pratik, what your take is on that?
Basically, I'll tell you something. Whatever glitters is not gold. We have heard it way back. So there are a lot of strategies. There are a lot of things so what you can achieve, what you cannot achieve. What you need to understand is the health of your account first of all, right? So health of your account, I always talk in a very layman term. Does not mean that you have a Panadol in your medical box that you have to have it, right? If it's there, it's just for the health of the account. So let it be there. You don't have to keep having it all day. I have it, okay? Second, diversify yourself in this market, always and always, because this is the only market that dances on the emotional tune. This is the only market that dances on the emotional tune. I've never seen in any of the pubs that you're dancing on an emotional tune, but this market does. So we need to understand this market is very volatile. It's way liquid than what we think and you think. Entering into a market as a retailer or as an investor, you need to understand a couple of things which all the gentlemen have already highlighted. There's nothing much to leave. But yes, try and understand, add your logics behind it before getting into it. You're not missing on anything. Sunday comes every week, but you're not missing anything.
It's never the end of the world for Pratik. It's never the end of the world. Amarnath.
So I probably beg to differ with some of the panelists out here. I think prop trading as a product is a great product. It obviously will see changes as it comes around. But look at it from the trader's perspective, right? I know the money is not yours, but you're allowed to trade in it, which means it's giving you an opportunity to learn from it. So you could probably learn, make mistakes, you have nothing to lose out there. The upsides are much more than the downside. So why not take advantage of it and lose? And that's probably one of the reasons where you have a lot of novice traders coming in and getting into the prop trading part. And that's probably going to evolve. I mean, obviously from a regulatory perspective or a technology perspective, what happens we don't know in the future. But I sure for one hope to see the prop trading evolve in a much better way.
I think I'll add to this. You know how, taking a metaphor, you know how when you buy cigarettes and it shows, a graphic that's not very, a disturbing graphic that says smoking kills. Why don't we have these kind of graphics for these kind of products that says, future performance is not an indicator, past performance is not an indicator of future. It's not really, really big in the writing. It's like small writing at the very end of the product, generally speaking. Also, after you place a trade, it doesn't remind you that this is not your money. This is money that you can access to, but you cannot withdraw it. I wonder, just a side question here. Do you think there should be more around that? Would it really kill the business model, or what are your thoughts on that? Maybe we start with Lachlan.
Interesting question. It's very tough, actually. Look, it depends. The regulators, I think they would love it as well. The more warnings with respect to, highly risky leveraged trading instruments,
Right.
is always, to the benefit of the end client, and I think that's the most important thing, right? But at the same time, obviously, the four of us, the five of us, all work at brokers, and we need to make our money. So it's a tricky question to answer. Look, I think at least I know where Scope stands, and we try to be as transparent as possible across the board and as ethical as possible. I know these gentlemen are very much the same, the firms that they work in. So I think of course, I think it's better for the industry if there is greater warnings.
Hope it doesn't kill the business model. Yeah, go ahead.
Actually, we work in a regulated environment, governance, compliance, regulation, cornerstones, pillars of our business. We boilerplate, we top and tail every communication, everything with the right regulatory notices. This is a high risk leverage product, X percentage of clients lose their money. We say it as many times as we can. Clients understand the risk, they're active market participants, they know what they're doing, we have a healthy industry. If you go and boilerplate prop firms or other products the same way, and clients don't like it and don't trade the product, well, guess what? It's not the right product, they're not active participants, you don't have an industry. I don't think there's anything wrong with putting the regulation on that. It's not a big deal.
Fair enough. Fair points. Anyone want to speak on this before we move on?
Unless and until you have your real money involved in it, you will not get the seriousness out of yourself. If you actually want to learn this you are novice for this market, you can try out your demo accounts as well. But you do not have to experience it on somebody else's money, because that's not your money end of the day.
Right.
You will not get that seriousness out of yourself. If you really want to understand, unless until it's a $10, but then if it's in your hard-earned money, you will definitely get serious about it. How to trade, what all signals that you have to follow. You will start learning about it. If I give you a demo account, if I give you a live account, I can bet on it. For a demo account, probably you will go out driving, dinner, everything. But when your real money is involved, you will cancel all the plans and look into it. So this is the kind of thing that brings a seriousness out of a trader. It's always good to dictate terms on a cricket field, but when you go to real bat, you understand how the ball is coming onto you.
Very well said. I think that metaphor of money, women, and booze would be very different from virtual and real. Let's move on to the rise of cryptocurrencies. I think we cannot ignore this rise. We're seeing that time and time again. Every year, bull runs, bull and bear runs are happening, but Bitcoin is certainly rising and it cannot be ignored. $64,000 is worth one Bitcoin. What is worth $1 today, $10 today, $100 today? Less for your money. But yet Bitcoin seems to be on the rise. With the recent ETF approval of BlackRock and the SEC also backing it, I wonder if brokers are starting to accept it as a proper means of investment, a proper asset class. Maybe we'll start with Lachlan here. Are Forex brokers starting to accept cryptocurrencies as a real asset class?
Absolutely, yeah, 100%. It's very much almost in every single conversation, new conversation that we have with our prospects, with our clients. It has remained a hot topic and an in-demand product or asset class for half a decade now, or maybe pushing a decade. And it's something that we do facilitate at Scope, and we're heavily investing into as well. So keep your ears to the ground on the developments there. But yeah, definitely, there's lots of potential for us and for all the brokers to open up new markets, make it more appealing and appeal to new traders as well. So yeah, massive.
I'm just gonna follow this question on to Amarnath. While Lachlan's viewpoint is very positive and bullish, still we see that brokers are not accepting it in their brokerage because apparently Bitcoin and other cryptocurrencies are not regulated. So I wonder, is it really they're bullish about it, but they can't do it because of regulators, or what's the case? You think?
I think, in my view, a number of reasons. I think initially, I don't think a lot of brokers would want to have cryptocurrencies as an asset class introduced in their platforms. But it was just the demand that the market had. And we had a lot of these crypto players coming into the market and having a lot of clients there.
Right.
So the brokers embraced it hesitantly initially. But the fact is, the crypto market is a very cyclical market. It's quite volatile. So once you have a client coming into the crypto side, it's probably easier for the broker to try and get the client to invest in other asset classes, which the broker kind of did. In terms of the brokers not giving the asset classes of crypto asset classes as of now, due to regulatory reasons, there's a strong reason for that. Because the regulators will be up to you and say what's happening, you cannot do that. And nobody would want to get their reputation damaged out there or get punitive fines on that. So there would be, unless there's a proper regulation on cryptos, obviously it's slowly coming in, but it'll take some time. So once it is fully regulated by various regulatory agencies, then probably the brokers will embrace it completely. Till then, it will still be there, but not there in a way.
Just to note, you can still trade as long as it's a CFD. You can still trade Bitcoin CFD, but you won't hold the actual underlying asset. Jay, what's your take on this?
Well, that's the point. We offer a CFD-based product. We can make you a market in anything. I mean, all we have to do is get a starting point, a contract price, and a closing point. So it's not very hard to do this in cryptos or anything. I think the reality is that the demand for a product always going to exceed or front run the supply in very basic terms. And more people are interested in it. More and more clients want to trade it. We need to find more and more counterparties to write the other side of that contract. So I don't see any reason why people don't trade it. They can as much as they want. And the more people are interested in trading CFD cryptocurrencies, the more market participants on the other side, the better the product will become.
Pratik?
Same thing. I believe in. I respect both the parties. There are few traders which are traditional traders. There are few traders which is a newbie trader who accepts everything, whatever modernization that we are seeing in nowadays world. They're ready to accept everything. In our world also, we still get to understand that no, I only want to trade on MT4. I do not want to trade on MT5. Although there is not way different, but then they are traditional traders. They are set with something. When you have some kind of arrangement with somebody, you do not want to step out of that comfort zone. And this is what the same thing is happening with the Bitcoin. They still do not consider it as a very legitimate form of trading. wherein the newbies are faster, they understand this world, and they're up and ongoing with this. Yes, that's the fastest mode of payment. We can take it. Real estate started accepting it. Why not you? A lot of European countries, they have started ongoing with their digital currencies as well in the banks. I'm telling you. Why is that? Because that is the next level that's gonna happen. That's gonna be the future. You can carry. You do not have to carry a wallet or a card anywhere, go across the world, and you can travel. If you have something in your wallet, in a crypto wallet, you can exchange it, you can get it done. So that is the new thing that will take some time to come, but eventually it will come because it's a digital currency. People just hesitate because it's non-traceable as per them, but then yes, after few years down the line, we all are here, we know that this is the new in, regulations will have to accept that.
Jay, given your stance on prop trading and purchasing those challenges, your stance is quite on the defensive. I wonder if your stance is also on the defensive on crypto, given the volatility of it, and also would you concede that it is a sort of a haven, a safe haven, hedge against inflation and the current money printing landscape that we live in?
Well, I think cryptocurrencies is a small, tiny portion of what the blockchain is. And I think the blockchain is incredibly exciting. And that's where the real magic is happening. That's where we're transforming so many things we do in the financial world, in other industries. It's incredible. In terms of a cryptocurrency, I don't really understand what the values are. I don't understand what they stand for. I'm sure many people do, but that is the least interesting part of everything behind them. So I'm very, very pro blockchain. I'm very, very pro transformation. Yeah.
Amarth, did you want to add to this? You're okay. Cool. I think we'll move on to a look ahead, a look into the future. In terms of now, obviously we spoke about cryptocurrencies being an emerging trend, but we cannot ignore the bigger emerging trend, which is AI. What technological innovations can brokers and the general wider FX market expect to see in the future that may impact liquidity? I think we'll start with yourself, Prateek.
So basically what will happen in AI is basically now what they're doing is they are developing new algos for which when now retailers, it will reach out to the retailers as well. When the algos come in picture, it reduces the human intervention. When such kind of product comes in the market, there will be more liquidity what we are seeing right now. Because every retailer will come with an algo, their set of algo, their set of rules, their set of principles. And that will bring in a lot of liquidity in the market. A lot of churning in the market. In fact, in terms of technology also, we are seeing a lot of algos which used to be traditional, but now there are algos which have been created on HFTs, a high frequency trading that we see. So this is going to be implemented not later, but then yes, what I have personally started seeing is I've seen retailers also coming up with it. So it is more approachable, and for me, my idea to look at is from the liquidity perspective. I would want somebody else to also join on that.
Amarnath, why don't you take this one?
It's a double-edged sword, to be honest. I mean, while the AI is here to stay, obviously a lot of strategies are getting evolved thanks to AI. It's probably a problem that the liquidity providers would have. Because you'll have a lot of, as Prateek mentioned, a lot of retailers are using strategies and all that stuff. There's a very thin line between genuine trading and abusive trading. And that's where the issue would come, probably for the liquidity providers, to try and ascertain which part of it is genuine, what is abusive. Because those things, the boundary lines for those trades will go on changing. We'll have to evolve with time as liquidity providers to really see, and so that the genuine traders are not harmed, but it's just the abusive traders. So you just have to tread a path very carefully with this.
I just want to add before we go to Lachlan, when it comes to AI and AI bot trading, won't this kill the model of introducing brokers? Because there's no need for human intervention anymore. So why would we pay commission to a human when we can keep the commission to ourselves? So, question to you, Lachlan: would this kill that model?
I don't think I agree. No, I don't think it will. I think the whole point of IBs, at least the ones that I've seen and the most successful, it's about relationships. AI can't replace relationships, or at least I hope not. Otherwise, I'm out of a job. So, look, going back to AI in trading and liquidity, I think there's two aspects to it. It is an enormous threat in the short term, at least, and a massive opportunity as well. So, I think the threat has definitely come to fruition before the opportunity, at least in the forms of, looking at EA. People are developing AI based into it to intentionally cause as much market impact as possible, particularly in FX and gold. So I think that's a threat, but equally, liquidity providers and risk management firms can utilize AI in their monitoring, in their surveillance of those types of strategies, and mitigate against any damages. Because at the end of the day, market impact, it's something that a lot of brokers don't necessarily speak about as often as we probably should. I know at Scope, it's something that we take a lot of care monitoring in real time, with markout curves, yield curves, whatever you want to call them, to be aware of these sort of predatory strategies. I'm certain for sure you'll have something to add on this, but there's an element of AI. I think right now it's more of a threat, but I think for sure, some of the technology providers, I think you're going to touch on this in a moment. I think it relies on our bridge providers, our aggregators, to implement some of these tools to make sure that it's accessible for every broker, not just the largest brokers, in terms of monitoring market impact and improving liquidity. Because at the end of the day, the less market impact or the less predatory toxic flow, let's say, the better, and the better sort of price and execution you'll ultimately provide to your end clients.
Interesting take. Before we go to Jay, I do want to add, I know, Lachlan, you mentioned that relationships are key, and AI cannot replace relationships. I love that optimism there, but I do want to give context that Sora AI, if you may know of, is now making videos that is indistinguishable between reality and what was generated by AI. Now, certain actors